How you allocate your capital, or simply put, what you do with your excess cash, can have a drastic impact on your long-term net worth. So one of the things that we talk about most with our clients is how do you go about allocating your excess cash and what can you put them into? The number one thing that I have found is that it is important to invest your earned money into income producing assets. So I'm going to discuss a few of these and how they might be great ways for you to build and grow your long-term net worth. So first and foremost, stocks. So to me, stocks are the easiest way to get money into other businesses that are then trying to grow their business by either growing their top line revenues or paying you a dividend and generating income for you. So taking your money, putting it into the stock market has proven successful for many long-term investors. And the history of the stock market will show that we will have positive years on average 3 out of every 4 years. And the long-term growth potential for stocks is about 8 to 10%. So given the fact that you can take your hard-earned money and put it into something that can passively grow for you, our first position when we're dealing with clients or with my own money, I'm looking to put that into stocks. The second bucket of money that you can look at would be bonds. Bonds are a debt instrument. They're a little bit more conservative, which means you'll get, on average, a little bit less of a return than you would see from individual stocks. However, this can be a way to provide you with some income, and typically this income is greater than what you would get in a checking or savings accounts or in a traditional money market as well. By looking at bonds, bonds are simply you're lending your money to someone with the promise that they would pay that money back over a set time period. All the while that they hold your money, they're paying you sometimes twice a year a coupon or an interest rate on that bond. So on average, bonds tend to perform anywhere from 3 to 5% on a long-term basis. The other two buckets of money that you can look at would be real estate. So real estate is something that's obviously very popular. Everyone probably knows someone that has generated great long-term wealth by investing in real estate. There's a couple different ways that you can look to invest in that. You can go at it on your own by looking to invest in single-family or multifamily properties, find that investment, maybe fix up the investment, and then provide you with income through a renter or multiple tenants. That tends to be a great way to leverage your money and can provide you with outsized returns if you can buy right at the certain time. Obviously, you'll have the headwinds of what the real estate market does. Also, again, you can generate greater returns by putting less of your own money into it and being able to borrow from the bank to leverage up your returns. However, what we've seen, it can be difficult to find the properties. Asset prices are very high. We have been in a seller's market for multiple years now, so finding that property on your own can be very difficult. However, there are also passive ways that you can invest in real estate, whether that be through real estate income trusts or just by holding real estate companies themselves. They tend to provide a higher dividend than most traditional companies will. So looking at publicly traded REITs is a great way within your portfolio to get exposure to real estate and provide you with some passive income. The other part you could look at would be investing in a small business. So this can produce some of the most outsized returns. However, just like real estate, small businesses can be very hard to find one to buy. Then you need to determine what type of lifestyle do you want. Do you want to spend your time working in this business, operating this business, growing it, and that be your ticket to long-term wealth? Or do you want to simply find someone to run that business for you as an operator? Find other people where you can come up with enough cash that you would need to purchase the business, plus maybe some financing from the bank, and look at operating it that way. So owning a small business has been one of the number one ways in the U.S. to generate and grow your long-term net worth. Lastly, the other thing I wanted to talk about is alternative investments. These are oftentimes known as hedge funds or private equity. These are also available for accredited investors or qualified purchasers. These types of investments tend to come with a longer-term time horizon where your money could be locked up for 7 to 10 years potentially. The one thing that is positive about these is they tend to not be as correlated to the stock market, so they are a great way to diversify your wealth. However, keep in mind, you do have those lockup periods. They tend to have slightly higher fees. So look at that bucket of money purely as a long-term bucket of money for you, money that you don't need in the next 3 to 5 years that you can kind of forget about, for lack of a better terms. And hopefully down the road, you'll have some sort of exit and liquidity event within that private equity fund. So these are common ways you can take your excess capital, you can start to allocate it into income producing assets in ways that you can grow your net worth.